Now that the central bank rate is at 9%, the lowest ever, do you expect things to get better immediately? According to experts, the effect of a lower CBR takes a little longer than a few weeks.
Of course, in the long term, what the intended impact of the Bank of Uganda action is to ensure that commercial banks also lower their lending rates as inflation trends down and as also as the economy grows, because of course the economy is heavily dependent on borrowing by the SMEs, and the banks will have to eventually, of course, start lending to this segment of the economy.
Nevertheless, things are not all gloom even now.
Much as there's been a marked slowdown from 2016 into 2017, there is signs of a recovery. And you will see, compared to where we were at in June and September of 2016, there was a marked improvement in the last half of last year, which speaks to a recovery, a potential recovery, especially as we get into 2018.
While speaking to investors this morning, asset managers Stanley pointed out that while lower interest rates are good for you, they are risky for them while investing people's savings.
And as rates are coming down, we actually make strong returns from our bond portfolio because when you revalue a bond portfolio at lower interest rates, you end up making a capital gain. The challenge then becomes, in terms of a risk, the reinvestment risk. It means because the money that we then get, we then have to reinvest at lower and lower rates, which portends a very, very big risk for us and for clients. So how we mitigate that is that we then look at other asset classes such as equities.
So, for you investors that keep money with the likes of Stanley, it's a mixed picture of modest and even better returns in the environment of dropping interest rates. Jonathan Adengo, NTV Business.